yesterday the Reserve Bank operationalized the rules for that 30,000 crore fund which the Finance Minister had announced in May, I think, and it was supposed to be operationalized by an SPV which will be run by SBI Caps. It was supposed to issue bonds which RBI would subscribe to, and with that 30,000 crore it was going to buy CPs and NCDs, non-convertible debentures, from NBFCs, HFCs and microfinance companies. Now, yesterday the rules were announced. You know, the guys who are eligible should not have had more than 6% NPA in FY19 and some other capital criteria. But how useful is this? Because it appears that they can only buy short-term paper. We have two people who are extremely familiar with the sector: Ramesh Iyer, Vice Chairman, Managing Director, MMFSL, and R.K. Bansal, the Managing Director of Edelweiss ARC. Good morning, gentlemen. Thank you very much. Mr. Bansal, am I right in assuming that NBFCs and HFCs and microfinance companies which have, say, a 3-month funding mismatch will only benefit from this?
The idea is basically due to lockdown, due to moratorium, the people are not, NBFCs and MFIs are not able to recover the money, and they may have a liquidity mismatch for short term. So this is only NBFCs and MFI who can, HFCs, who can subscribe, who can give these papers to this SPV, and in turn the borrowing entities can extinguish their existing liabilities.
Okay. Ramesh Iyer, if you can explain how this will work, is this more a relief to mutual funds actually? They can go and they will find a buyer for their shorter term paper, or can it have a virtuous cycle because there is a buyer? You know, more people can issue a 3-month or 6-month paper. How does it work?
I think, you know, of course it will maybe help mutual fund, but if you look at it from an NBFC perspective, like Mr. Bansal just explained, there could be some temporary pressure that people may go through. But I think the real take is, it is all with the expectation possibly that 3 months down the line, things would get normalized and one would be able to then discharge this liability. Right? Otherwise, it's just kind of, in a way, pushing the current liability into the next cycle of 90 days by taking a temporary relief now, paying off a liability, and expecting in the next 90 days, that is between September to December, things to normalize and NBFCs would start to collect again and then be able to discharge liability. So I think one has to be extremely cautious, even as an NBFC, if you are getting into borrowing through this route. You must have a little more clarity and clear vision on how do you see the 90-day cycle starting October, December.
So, Mr. Iyer, as your own company, do you meet the criteria to avail this special window? And how will this ease the funding resources for you, if at all?
No, so criteria, of course, we would meet, but I am not sure that we will look at, you know, this type of borrowing, because we don't have at present so much of cash flow pressure in terms of ability to discharge the liability. I mean, you know, in one of our earlier calls I had mentioned that we are adequately funded and will be able to meet our liabilities, including discharging the interest repayments. So, you know, and it's like any other normal CP, which I think some of us are able to even raise. So I'm not kind of too sure that we would be issuing papers to borrow for a 90-day cycle. But as a criteria, of course, we meet these criteria. They are not very stringent ones to be not able to meet.
Okay, 1 minute, Mr. Bansal. You know, the rule says that this SPV will buy up to paper issued till September 30th. So, does this mean that I think they will buy 3-month paper? So, till December, NBFCs need not worry about funding mismatch. Is that the way to understand this?
I mean, the idea was that, but if you remember, we discussed once that initially the idea was to buy the papers from the market. But today it talks of from NBFCs and MFIs only. So your first question, like mutual fund, whether they can get the help with this scheme may not be, because the initial idea was that you can buy these papers from the market, secondary market. So now it is only primary issuance. So if NBFCs, as Mr. Ramesh has said, basically if you are issuing, you need some liquidity up to September. So you can issue a 3-month paper which you can repay up to December. So it's a small measure for short-term liquidity, but it's not that type of measure which was initially expected that NBFCs or their paper can be bought from the market. So there is a liquidity in the system, and then later on NBFCs can also issue long-term papers.
Okay, then we should stand corrected. They can buy it if this is only for primary issuances of paper, short-term paper issued by NBFCs, HFCs and microfinance companies. And this SPV will buy the paper till September 30th. And since it is short-term paper, these three kinds of entities can perhaps issue paper up to 3 months, even on September 29th or 30th, and therefore they are covered till the end of the year. This is not meant for mutual funds. It's not a secondary market purchase. I'm sorry about that. Ramesh Iyer, since we have you with us, can I also diversify into asking you whether things have improved, because we're getting such good data from rural-facing companies?
Yes, we definitely see a lot of buoyancy in the rural market. I know our 1100 branches are already up and working, and we definitely see change of sentiments, and with the monsoons setting in, the sowing beginning to happen, I think the rural will be the turnaround story. We can see that very clearly. The confidence is back, I would think, even in our own employees. We were originally concerned, how will they come back, what would be their reactions, etc. But I think rural is decently insulated from the current problem, and things seems to be turning absolutely positive.
So that is particularly for segments like tractors, but I wanted to understand the other segments that you cater to, like commercial vehicle loans, utility vehicle loans. We are seeing a lot of pressure there. Any green shoots there at all, or do you think it will take time for those pockets to recover?
Commercial vehicle could take time, but very clearly the car segment, the utility vehicle segment are definitely showing absolute demand and buoyancy. Footfall at the dealerships are high. I think currently the problem of the industry there for these products possibly is going to be supply constraint with their supply chain yet to be fixed up. I think from a demand perspective, we do see people coming forward, and I think pre-owned vehicle demand is also picking up. People asking for second-hand vehicles. So I think commercial vehicle is likely to take little more time. But again, even in that segment, LCVs and pickup kind of vehicles are already showing a lot of traction. So I think the overall demand definitely seems to be getting to some normalcy. And I remember in one of the earlier calls I said, definitely festival season, that is October and onward, we can see even better things.
Okay. Mr. Bansal, actually our understanding that the SPV will buy from mutual funds is correct. Ritu Singh has just sent me the FAQ, and in the FAQ it says, will the trust invest in securities from the secondary market? The answer is the trust can invest in securities either from the primary market or the secondary market, subject to the conditions mentioned. So it looks good. So that is a little more relief.
In fact, it can help MFI industry substantially.
Yeah.
They are facing more pressure for non-payment for 3 months, and their loans are mostly short-term.
Fair
So I think it can be used there.
Positive for them. Okay, I also wanted your 30,000 feet above view on the NBFC sector. The market was living in fear that one or two might default. Do you think that fear is past now, or do you think it still lingers?
I think the overall sector has whatever challenges it has seen after LFS. I think they are all past, but I am not expert in the area, so better I will not be able to comment. But I think it is everyone knows now about every NBFC in every sector.
You would still say that FY21 still will be a year when NBFCs will have to contract balance sheets?
Depends in which segment they are operating. So NBFC is not one sector, no. PFC, RAC is also NBFC, SBFC is also
all right.
NBFC. Yeah.
Okay. No, fair enough. I wasn't thinking of PFC, RAC. I was referring to the private sector ones. What about your thoughts, Ramesh Iyer? Do you think risk aversion will dominate, and therefore this is still just about consolidation and conservation of balance sheet?
I think more than risk, and now the liability side is also kind of getting sorted out. I think it's going to be from overall demand for the product. So, if you lose a quarter, that is April, May, June wasn't as big as any previous year, right? How do you catch up for that going forward? And I would very strongly believe it's only from October to March one should really look at how demand picks up, and the real comparison should be October, March versus previous year, October, March. If you were to look at the whole year as a comparison, I think there is no doubt that the disbursements would be much lower than the previous year, having lost the period. But, the overall sentiments, even for NBFCs, is turning positive from a point of view that, as much as it was discussed in April about the liquidity pressure, the moratorium impact of collections, will there be default? I think those things are definitely behind. I don't think those are the real issue. I think the concentration now will be post-moratorium.
So can you give us some numbers in terms of collections then? How much have the collections gone up? What is it stand at now? And also on the moratorium book, how much has it reduced to or moved into the second phase?
No, as I said, moratorium, when it was offered, even the consumers didn't know what it was. So they said, why not take if something is being offered? But as we see, even in May and in June, I think most of the people who've taken moratorium, upward of 50-60% of them actually are even trying to discharge their liability. Some of them may be even part payments. But therefore, they are repaying once they realize that moratorium comes with, it's not free and it comes with something that you'll have to pay back with interest at a future date, etc. So I think the reality is sinking in. And as I said, once they start to earn, they have no reasons why they don't want to repay. These are good customers who are putting 25% of their own money. So, just because moratorium is given, they are not going to become defaulters and non-payers. So they will continue to remain a good customer. And we believe that that's not going to be the pressure point even post-moratorium. We will have to partner them, give them some time until they start to earn. But definitely things are turning very positive, especially from the farm sector. If you see with harvest being good cash flows they have received, most of the farmers with quarterly, half-yearly installment did not even opt for moratorium.
Oh, right. Got that. Ramesh Iyer, we will touch base with you later on, of course, to check out how things are progressing after the Kharif season. Mr. Bansal as well. Thank you very much for joining us and clarifying how the scheme may work.
Thank you.
We take a break on that note. We're going to come back with